Look at this. Goldman Sachs says copper prices will decline in 2026. That is the most expensive lie you will hear all year. They want you to sell so they can buy. While they print bearish charts, the physical world is running out of wire. This isn't a dip, it's a bear trap. Smash subscribe and let's expose the heist. We start with the engine. China is pumping stimulus into their economy like a bodybuilder injecting steroids before a competition. To a beginner, this just looks like boring policy news. But here is the clue: policy driven. That means this demand isn't natural, it's forced. Think of it like forcing a kid to eat vegetables, except the kid is a massive industrial superpower, and the vegetable is the world's entire supply of copper. They are printing money specifically to buy hard assets, creating a vacuum that sucks the metal right out of the ground. Where is all that copper going? Right here. China is dominating renewables and EVs. An electric vehicle uses 3x more copper than a gas car. Wind turbines are basically copper wire wrapped in fiberglass. China isn't just buying copper to stack in a warehouse, they are weaving it into the nervous system of the future energy grid. It's like showing up to a potluck dinner only to find out one guy, China, has already eaten the entire buffet before you even parked your car. Now the rest of the world has to fight for scraps. Meanwhile, what are you watching? The S&P 500. This is the distraction. The media keeps you focused on tech stocks and imaginary internet money while the real plumbing of the economy is bursting. Looking at the S&P 500 to understand the economy is like looking at the scoreboard during a football game while the stadium is literally on fire. Sure, the score looks great, but the infrastructure holding it up is collapsing. You are watching the magician's flashing right hand, stocks, while his left hand, commodities, is picking your pocket. Meet Dr. Copper. This metal has a PhD in economics because it moves before the stock market does. Back in June 2024, it started screaming warning signals. Most investors ignored it. Ignoring copper is like ignoring your check engine light because the radio is playing your favorite song. Eventually, the car stops and you are stranded on the side of the highway. Copper warned us that the everything rally was fragile, but everyone was too busy buying AI hype to notice the foundation cracking. This is the scariest chart for America. China is building a supergrid. That is a continent-spanning power network that requires, you guessed it, ungodly amounts of copper. While the US argues about fixing potholes, China is rewiring their entire civilization. Think of the global economy like a LAN party. China is installing fiber optic cables and liquid cooling, while the US is trying to run a supercomputer on dial-up internet and a daisy chain of extension cords. They are securing the hardware while we play with software. So, how did the US respond? They shot themselves in the foot. Tariffs in 2025 crushed hiring. Politicians love tariffs because they sound tough. We are protecting our stuff. In reality, a tariff on copper is a tax on everything. It's like trying to lose weight by sewing your mouth shut. Sure, you stop eating, but you also pass out. By taxing the raw material needed for construction and tech, the government accidentally strangled the very jobs they promised to save. Brilliant move, guys. By late 2025, the math stopped working. Copper became a ticking time bomb. Why? AI data centers. ChatGPT doesn't run on magic. It runs on electricity delivered by copper. We have unlimited demand from AI meeting a limited supply of metal. It's a game of musical chairs, but instead of chairs, it's copper wire. And instead of kids, it's trillion-dollar tech companies willing to kill each other for a seat. When the music stops, the price doesn't just go up, it explodes. Even China started sweating. Their renewable boom hit a wall because there physically wasn't enough stuff to go around. When the world's biggest buyer admits they have supply challenges, you know the cupboard is bare. It's like walking into Costco and seeing the manager hoarding the toilet paper. If he is worried about running out, you should be terrified. This signaled that the shortage had moved from theoretical to critical. The supply chain wasn't just strained, it was snapping. Then came the panic move, a 50% tariff on copper imports. This is economic suicide disguised as patriotism. They walled off the US market. Imagine you are on a sinking island and your solution is to build a wall to keep the rescue boats out. That is what this tariff did. It cut American companies off from the global copper supply, guaranteeing that domestic prices would skyrocket while the rest of the world kept trading. It didn't punish China, it punished every American electrician and builder. The result? America's copper grab sent prices to the moon. Global copper was fine, but US copper was gold. We created a localized hyperinflation event. It's like paying $10 for a bottle of water at a music festival. The water isn't rare. You are just trapped inside the fence. American companies had to pay a ransom for raw materials, driving up the cost of everything from houses to iPhones. The protection policy actually just protected high prices. And now we circle back to the hook. Goldman Sachs telling you prices will drop in 2026? Look at the timeline. We just saw a shortage, a supergrid, and a trade war. Yet they want you to believe the price is going down? This is the head fake. It's the weatherman telling you it's going to be sunny while you are actively drowning in a flood. They need retail investors to sell their positions so the institutions can buy the dip. Do not fall for the forecast. Look at the supply. The real news is here. Unstoppable run. Published after the Goldman forecast, this confirms the reality. The price is at all-time highs and ignoring the experts. The market is truthful. The forecast is marketing. When an object is unstoppable, you don't stand in front of it betting it will stop. You jump on board. The surge is driven by physics. We need more copper than we have. No amount of bearish reports can change the laws of supply and demand. So how do you play this? You don't buy coils of wire and store them in your garage. You buy the miners. COPS is an ETF that holds the companies digging the stuff up. Think of it this way. During the gold rush, the guys digging for gold often went broke, but the guys selling the shovels got rich. In a resource crisis, the miners are the shovel sellers. They have the inventory everyone is desperate for. Owning the metal is good. Owning the mine is better. Finally, the secret weapon, nuclear. Why is this here? Because you can't have AI without power, and you can't have power without copper and uranium. Nukes and copper are the peanut butter and jelly of the energy crisis. The smart money isn't just betting on the wire, they are betting on the electricity flowing through it. This is the picks and shovels trade for the AI revolution. If you believe in the future of tech, you have to own the power plant. Here is the big picture. The government broke the market with tariffs, China bought all the supply, and Wall Street is trying to trick you into selling. We are entering an era of hard asset dominance. Your paper money is melting. Copper and energy are the only life rafts. Don't let Goldman take your lunch money. If you want to ride the real supercycle, smash that like button and comment copper below. I'll see you on the moon or at the scrapyard. Peace.